Hey guys, it's your boy Nathan with theLender. Hey guys, just want to shoot this video. There's a lot of myths out there about mortgages. One of them is how to make profit on a mortgage, right? I've recently seen videos where people calculate profit and they're not calculating it correct. And it really drives me nuts as other people are giving advice, but they're so wrong, right? So let me go over this scenario with you guys, right? One of the biggest house hacks people talk about is buy with an FHA with 3.5% down. They say in 5-7 years, you'll make $100,000, and they calculate it based upon appreciation, based upon you're paying down the principal, right? So let me go ahead and tell you that's 100% wrong. So the reason it's wrong is because you can't count paying down your principal balance because you live in the home, you pay it. So let's go with this strategy, right? This is what I have all my clients doing. Right now, it's more of a buyer's market. So let's say you pay no closing costs, seller pays it. You buy a property for $400,000, you do the FHA 3.5% down. So you're looking at a loan of $386. So over the next 5 years, you're going to pay principal balance down. You're probably going to pay it down to $360,280, $360,280. Sorry, I didn't mean $280,000. That means you're going to have a gap of $25,000. A lot of loan officers are going to tell you that's profit. It's not. I know that's a myth, a secret. It's not profit because you paid it down. So with appreciation, the average appreciation from many reports is between 3.5% and 5%. So let's just cut it in the middle at 4%. Your $400,000 house, if it appraised for $400,000, will be worth $486,000. So if you sell it, and let's just say at the end you pay closing costs, but at the beginning you didn't, so it's a wash. So I'm not even going to count seller closing. Your profit on that home is $86,661. It's not more than that. It's not 86 plus the down, plus what you pay down. It's not how wealth in real estate works, y'all. That is what I'm seeing a lot of loan officers do right now, and it's wrong. Now, let me tell you how you can make the best bang for your buck, okay? Let's say you bought that house. After a year, you moved into another house. And so you have a renter there. So let's just say the renter paid your principal balance down $20,000 in the remaining 4 years. You then can add that gap of that principal balance that was paid down by the renter to your profit because you're not paying it. That's a hack. So if a loan officer tells you you can make X amount by the principal balance that you paid down plus your appreciation, guys, find another loan officer. That loan officer is not telling you correctly, right? If you put a renter in the home and the renter is paying your principal balance down, then it is profit, yes, which is what we teach with investment properties, that it's better to buy investment properties even if it's not the best cash flow, because renters are paying your principal balance down plus appreciation. Compound interest up here is your biggest chunk, but also you're going to get a little cherry on top with the principal balance being paid down. So guys, just make sure before you buy a property, you talk to the right loan officer. Building wealth in real estate is amazing, but not a lot of loan officers understand it. Not a lot of investors understand it, or coaches. Make sure you look at everything, right? That wealth that we just talked about is a big portion, but for a lot of us, the bigger portion comes with the tax write-offs and everything else that goes with it, especially with short-term rentals. So guys, vet your loan officer. Be careful what you believe on TikTok, Instagram, and all that stuff. There's a lot of misinformation out there. So guys, if you have any questions, schedule a call with me. Reach out to me. All my contact information is below. Guys, I look forward to talking with you, but just make sure if you want to look at a deal, you're trusting who does the numbers for you. Guys, have a good one.